And welcome back. Cuthbert Langely in for Nick Barris this morning, joined with Dr. Friday. We are talking taxes, always the popular discussion. We've already had some great questions coming in this morning. If you have a question at home, give us a call here in the studio at 737-7587. And speaking of the phones, we have Mary on the phone right now.
All right.
Mary, good morning. This is Cuthbert. What's your question?
Hi, good morning. Thank you for taking my call.
Absolutely.
I was wondering, my husband writes some music and he makes some royalties. And we usually just file this 1099s with our regular, in April. We have never got fined or anything, but is there a certain limit if you make more than a certain amount that you need to start filing quarterly, or?
She's talking about estimated payments or quarterly 1040 ESs, and the answer to that is not in black and white, but basically if it's more than $500 due at the end of the year is a good rule of thumb, then you should start paying quarterlies. The second thing would be is if you're paying 100% of the year before, you're not required to pay estimates. So if you're having enough come out of your paychecks, even though he's doing his royalties, and make sure those are falling on your Schedule E so you're not paying self-employment on royalties. But that being said, so the rule of thumb of over $500, you want to start paying it because that's a fairly hefty check to come up with at the end of the year. And then otherwise, you can never really, but 100%, they weren't going to fine you or penalize you either way.
Great, awesome, great question.
Yeah.
And great answer as always.
That's right.
Julie joins us right now. Good morning, Julie. This is Cuthbert. What's your question?
Oh, hi. I live next door to my mom, and she owns the house that I live in, and she plans on leaving it to us, knowing her will. And I was just wondering about the taxes or the liabilities on that.
Awesome question, because that's what a lot of, and your mom is a smart woman because she didn't gift it to you, she is actually leaving it to you in your will. If you have property or you have anything of real value, ideally don't gift it to somebody, because when you gift it, you're gifting it actually at the value that you paid for it back whenever. And then let's say in this case, maybe mom brought this house for $20,000, but today it's worth $200. So if mom leaves it to you in the will, guess what? Zero tax, because it's going to be given to you at the basis of whatever the value is at the time of her passing. So at that point, unless you live in it for another 10 years, and that's when you're going to file that basis, and then if you want to sell it, you'd have a zero capital gains. If you want to live there and continue living there, your basis will be whatever it was at the date of your mom's passing. You will want to get an appraisal, so that way you have a good solid basis, and then if it becomes more valuable or whatever, lose, win, whatever. But that's a great example.
Absolutely, and I think that's a question a lot of people are probably going to have. So
absolutely, because a lot of times, and parents especially, like to make sure their children are taken care of. And one of the ways they do that, they like to gift things, a house, they go out and buy a house or whatever, and they like to gift it so they know that child is taken care of before they pass away. The problem with that is, guys, is that you just ruined a wonderful tax advantage of this step up in basis. So be really smart. Better to put it in trust, so when you pass away, the trust will then give it to the child you want, or to leave it in a will, and then then that way it's your wills, wishes, whatever are taken care of.
Right. This is a question I have just as a reporter, somebody who's kind of been around a lot of the scams out there right now. Can you kind of touch on some of those and just how important it is not to fall?
There are two really big scams going on right now, and if you go to irs.gov, you can read a little bit about them. I've actually had clients that have had both of these scams. In fact, I had one of them that they tried, a phone call scam. So they call you up and they basically say, you have an IRS debt and we want to settle, you have to settle it today, or we're going to have the sheriff's department at your door. Well, first thing is, if anybody gets the Internal Revenue Service, I shouldn't say this, but basically if the IRS calls you and you have no knowledge of any IRS issues in play, hang up the phone. If this person says they're with the IRS, hang up the phone and immediately call back the local office, either the advocate's office or the 800 number locally, whatever, but just call back yourself, because 99% of the time, if you go back and if you're a Google person, you can type in the number that came up on your caller ID, you will find out people have already reported those numbers, and most of them are coming from like New York, which I think are piggybacking from overseas. Most of the people have accents, at least the person I did. So that's one big one. But just don't give them any information. Just hang up the phone and just ignore them as far as that. Second is email scams. IRS will never, ever, ever email you. So if you get something in the email, it says, especially a popular one is your EFTPS payment, which is the electronic filing for anyone paying their taxes online, has failed, which is of course a fear of everybody's, or whatever, and you need to call us immediately, and they have a phone number or they have a link. Do not touch it, delete it, or forward it to the IRS for the scam department. But again, the IRS would never do that. If you have any questions, check your bank account. You'll see if the money came out already. If it hasn't for some reason, immediately call the local office again and deal with it directly with the person, because both those are trying to either get information, get into your computer, basically find ways. And in the phone call one, they'll have you run down to, believe it or not, like a gas and go kind of thing, and use your credit card, or they'll ask for your credit card number and stuff like that. So it's pretty scary.
Crazy stuff, yeah, absolutely.
Oh my gosh.
Anytime the IRS is involved with anything.
You hear sheriff, IRS, you're like, oh my God, they're going to get me.
That definitely would scare me for sure. And this kind of is a good jumping off point here. E-filing versus mailing. I think a lot of people might still have some concerns about just how safe is my personal information when I'm e-filing.
Right. Well, you have two things. One, if you're using a paper preparer like myself, and that paper preparer does more than, I think, 10 or 15 returns, so an actual active one, you have to e-file with us unless you basically tell me you don't believe in it. It's a risk to you, or it's a religious thing. We have like 6 choices, but bottom line is you don't have to, but 99, and I'm under the pretense that it's just as scary to put it in the mail as it is to e-file, personally. 2, I have a better paper trail when I e-file, because I get an electronic signature back from the e-file company, versus the mail, we get a certified stamp, but the IRS doesn't always accept that as proof of payment or proof of filing, believe it or not, because they don't know what was in the envelope.
Okay.
So they argue that to us sometimes. So I think just paying, now some people like their money fast, and the only way to do that is direct deposit from the IRS, and that means you're giving routing numbers and bank. I have some people that will specifically open a bank account every year just to get their refunds and close that account. And then I have other people that won't even release it. They say, I'll wait for the check, which the check can take 6 to 8 weeks, and the other one takes 21 days, so it's a pretty big difference.
Is that recommended, to open a bank account just to get your return?
Well, I'm going to tell you this. The IRS knows all your banking. They immediately, whenever we get into an audit or anything else, they pull it. All that is reported to the IRS. So you opening and closing, if the IRS somehow gets broke into, your records are already in their files. So I don't necessarily think that's a major thing, but you know, to each their own. Whatever makes you happy.
Yeah, if it helps you sleep better at night,
exactly.
Go for it, right?
Exactly.
Awesome. Well, we are going to take a short break, but we'll be right back. Again, call 737-7587 if you have any questions. We'll be right back.